Hi everybody, it's Chris here from Serene Education. Just going to be looking at the four majors for the last week of April. So last week of April, this coming Friday will be non-farm payroll. So the first Friday of a new month, May, we should have a lot of non-farm payroll figures. So therefore, it's been a lot of news out this week, so just be aware of it. So it's going to start with the euro against US dollar on the monthly time frame, just to have a look and see how this month has progressed up until now. Looking at the hard right edge, you can quite clearly see that last month, the prior month, we had an indecision candle at a price support and resistance level. I did mention the prior month that we were trading at a 6-month high, and subsequently you'll see here on my monthly fib level, you'll notice that the 61.8 is still an area of long-term resistance. And I did mention last month that we did need to see this month, in fact, giving us a bullish engulfing candle break or breach of the 61.8 level, roughly around the 13.38.21 change mark, but ideally got to see a nice clear breach above this level. Being a 6-month resistance level, if we do get a nice bullish engulfing candle close by the end of this week in particular, going into the new month, that would then give us a lot of upside sentiment. Overall, our long-term sentiment still is up to the upside. Looking at the four requirements of this particular template, we do need to see an arrow followed by a candlestick the same color as the arrow. RMO is above the 0 level and our OSMO is above the 0 level. However, noticing that the last 5 months in particular, well, 4 months in particular, we have seen the OSMO indicator being dark green, which means that there is consolidation, and sure enough, we have had a resistance level, a 6-month resistance level, so that pretty much ties in. So we do need to see a breach, a close higher this month. So this week's going to be quite important in order to give us that. Last month's candle, indecision, almost a shooting star formation, exhaustion candle at a resistance level. It is a bearish intent candle, primarily because the intent is to the bottom side, but however, we don't want to speculate. It is an indecision candle because the open and the close have been quite close together. That coming at a resistance level. We do need to see a decisive candle that precedes an indecision candle. So this month's close would go a long way if it did close higher. That would tell us that the momentum still favors the upside, and therefore we can look at potentially long-term targets towards that 78.6, around about the 14.31 for the foreseeable future. Moving on to sterling, let's have a look at the monthly time frame. You'll notice straight away the thing that really pops out over here on the monthly on sterling is this clear resistance level high that we've seen since 2009. I've mentioned over the last number of months, in fact, you'll see that price over the past 2 months now, going into this month, in fact, we've seen price actually testing that fib level high here at the 50% retracement level at 168.250. Going forward, you'll notice that the long-term sentiment over here on our indicator is directional to the upside, positiveness, blue arrow, blue candles, RMO above, OSMO is above. However, you'll notice that the OSMO has been consolidative, over the past 2 months, in fact, but that's clearly going to happen, as you can quite clearly see that price is now edging a monthly fib level high, resistance level high that we saw in 2010, plus the early parts of 2008, 2009. So here going forward, we do need to see a monthly breach close higher. In fact, we've seen the last 2 months, in fact, actually tempting this 50% retracement level, however failing to close higher. And you can see the last prior occasions that we're actually at this same level over the last 4 years. In fact, you'll notice that we've had a major pullback on both fronts. So here, sterling, if you look at sterling's figures, a lot of growth, unemployment low, employment high, everything's fantastic. The interest rates haven't been changed for a long time. Carney's doing a really good job. However, to see any further progression on this particular pair, we would need to see a nice bullish engulfing close higher on the monthly. That would then dictate that upside is still very much in favor. And primarily, if we do get a breach above here, it'll be a 4-year high breach, would then psychologically be a very strong indication that the overall bias would then favor longs. If we do see that, then you'll see a flood of purchasing contracts or buying contracts upside, and we could look towards that 61.8 level on the fib level on the monthly at 1.76 as a potential target. We're looking in excess here, between these 2 points, you're looking in excess of 830 odd pips. You're not going to get all of it, but you'll see that there's a lot on the actual table in terms of profit if and when we do get a close higher. Failure to get a close higher subsequently over the next, or this month in particular, or any months going forward, would then start to look more bias or negative bias, because if we don't see the momentum driving prices higher, people will start getting a bit iffy, start taking further, closing a lot of their contracts, the upside contracts, would then start to take that bearish outlook. So as it stands at the moment, we should be looking for that bullish intent, the upside. However, far better if we start seeing, just dropping down to the weeklies, this week in particular being a very important week, non-farm payroll, first month of May. If we get the bias and it breaks higher, that will then lend to see further upside for the foreseeable future, and we can head towards that 61.8 above here. A clear 800 pips and more on the table for that. Onto the US dollar Swiss franc. Here again, monthly, you'll notice that the indicator, the long-term sentiment over here on the indicator bar, is directional to the downside. You'll notice that the candlesticks have remained blue for a long period of time. In fact, as it stands down the month, we have a red arrow, red candles. The RMO is clearly below the zero level, has been for a number of years, and the OSMO is below. However, this month is looking non-directional at the moment. You'll see that last month, in fact, we actually saw a spinning top, clearly testing a monthly fib level, but also a weekly fib level. So you can see that the last 5-6 months, in fact, similar to the US dollar outlook, we've seen a lot of consolidation at this exact mark, roughly around the 88.148 mark. So clearly indecision as we head into this very strong support level. If we do see a breach, and we would need to see a breach if this is still to be bearish out long. So this month in particular, if we can get that outlook and we get a bearish engulfing candle, that per se would then look to the downside. We do have a clear target for our first target towards a weekly level here at the 50% retracement, which is in excess of 300 odd pips. Outlook wise to the monthly fib level to the downside, you're looking in excess of 650 odd pips. So there's more than enough in terms of pip value, profit, target level. However, indecision last month, we do need to see a decisive move to the downside in this case to see any further progression. Short, we've had a lot of indecision at this level, so to get a breach and close lower would then open those floodgates for further selling contracts at the downside. At the moment now, it's been quite hesitant at this level, so rather doing the natural thing, which would be to join the speculation, rather wait for the actual outcome. If we do get a nice bearish engulfing counter close lower after this week's news announcements because of non-farm payroll, there's a lot of data from Wednesday onwards, guys. So if that all comes out US dollar negative, then we should see further shorting opportunities for the foreseeable future to the downside. Failure to get that, however, we could see a bounce, a correction, and then we could start looking back towards our 23.6 weekly fib, but also our 50% monthly fib level, which they correlate quite nicely here at the 93.59 mark. So rather see how this week progresses. There's going to be a lot of speculation out this week, which would then see a lot of whippiness. We don't want to be trading that. If you are quite aggressive in your nature, then yes, tapping in that quite aggressively before and after the news announcements is available. However, you're taking a lot more risk trading that way. So just be quite vigilant on your entries and exits. Last pair I'm going to look at is US dollar Japanese yen. I'm just going to pan out here to the monthly. You can quite clearly see that price has failed to make any new highs recently over the past 4 months. In fact, 5 months, in fact, as price came unstuck here at the 61.8, which is also a monthly fib level, but also the institution moving average on our monthly time frame. We had a tweezer top here. Price actually consolidated for a while, but we haven't seen any new highs on the monthly time frame. If I drop down to the weekly, you'll see that becoming more apparent. You can see here on the weekly time frame, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks of consolidation. Price not going anywhere very quickly. And if I actually draw a rectangle here, you can quite clearly see she's actually been trading within a consolidated range. We don't want to be trading ranges primarily because price is not actually moving anywhere quite quickly, and all you end up doing is losing a lot of time in this case, which is a good healthy 12 weeks, but you're not getting any true profit from that. It's far better to actually either wait for a breach either side of that. Candlesticks are still very much long-term upside bias. However, the longer we fail to actually make any new highs, the more likely that bearish sentiment starts to creep in. And that's what you need to be looking at, guys. Is price making new highs or new lows recently? If it hasn't and it's been consolidative, and that consolidation pattern has been holding for quite a significant period of time, then the bias will start to favor the opposite in that case. We would need, if this is still to be long, biased upside long, we would need to see a breach higher. But in this case, I'm more than willing to give quite a large amount of that back to the market, because I don't want to be trading any speculation. Here, I'd like to see prices trading above the 105.58 for me to even contemplate looking for any further long or biased long positions to the upside. And then I could look at potentially between that 61.8 to that 78.6 mark, which is my monthly fib level, which is in excess of 790 odd pips. So there's more than enough on the table for me to look for any longs to the upside. I just need the market to be more directional. At the moment now, a lot of indecision on the market for the US dollar, Japanese yen. I'm not willing to actually risk anything as such at the moment now to trade this very long, elongated, very narrow band or consolidation band. I'd rather not. The other upside would be to see a breach lower, but then I would need to trade well below the 99.100 mark. There's far too much aggressive near-term support and near-term resistance, so rather give that back to the market. I haven't traded US dollar Japanese yen for months now, guys, primarily because we've been trading in this very aggressive consolidative range. I'd rather look at other yen crosses like sterling yen, euro yen, those as other opportunities, and to stay well away from the US dollar Japanese yen for the foreseeable future. That's it, guys, short and sweet. There is a hell of a lot of data out, guys, this week, and a lot of it's going to be quite important in terms of the euro US dollar movement long term, US dollar Swiss franc long term, sterling. All the major currency pairs are sitting at major support and resistance levels, and not near-term support and resistance levels. I'm talking about weeklies and dailies. I'm talking monthly levels. Okay, these are very, very strong resistance levels. Euro against US dollar, long term. Sterling against US dollar, a 4-year resistance level high, guys. US dollar Swiss franc, a 6-month resistance level, support level low. So, is this week's non-farm payroll going to be the catalyst for further opportunities going forward? That remains to be seen, but we do need to be well aware of that news the news of the data, the fundamentals that are coming out this week, guys. It's the end of April, going into the start of a new month, May, non-farm payroll, and there's a lot of data coming from Wednesday onwards. In fact, Wednesday, Thursday, a lot of data, guys. We're talking ADP non-farm payroll figures, Canadians GDP month-on-month figures. We're looking at the US dollar advanced GDP quarter-on-quarter figures, FOMC statement for the US market at 7 p.m. GMT on Wednesday night. There's a hell of a lot of data Wednesday, Thursday, and Friday. So be very, very vigilant if you are looking to trade. Other than that, I hope to catch you guys on the actual forum, at the chat forum for this week. Nikki and I are teaching one of our students Monday and Tuesday, so we'll be back on, or we should be on sporadically between Monday and Tuesday, but we'll be back on full time again from Wednesday onwards. Until then, you guys trade serenely.